Are you worried overall about valuations?
Look, I think valuations are probably the fly in the ointment in regards to the current rally that we're seeing. But when we look at the macro outlook, the fundamentals are continuing to improve. You've got to be feeling that the market's going to continue to play a bit of catch-up, and we're probably expecting to see ongoing earnings growth coming through into next year, probably to some extent to nullify those concerns on valuations. I guess to some extent, Mandy, we haven't seen a decent correction in markets for I can't remember how long now. So everyone's saying it's around the corner, but we really need to see a catalyst and why that would be the case.
What would be a catalyst?
Well, look, the potential risks are that central banks or developed world central banks underestimate inflation. Now, that doesn't seem to be the case at the moment. Going to next year, the biggest risks probably are both around monetary policy by those same central banks, and that's going to change capital flows, particularly into the region. And then of course, geopolitical. Heaven forbid anything should happen in that respect. That's probably the key, because the underlying still is pretty solid. You know, when you look at all the PMIs, particularly manufacturing, we're seeing some pretty good numbers showing some momentum taking place.
But you're absolutely right that we're currently sitting in a Goldilocks period. But I'm glad you brought up the issue of inflation, because we've got this global synchronized recovery, right?
Absolutely.
You've also got central banks that are still, relatively speaking, very accommodative. You've got a big US tax bill providing a stimulus there. Don't you, and commodity prices at 9-month highs, don't you think that inflation is going to next year really bite us on the backside?
Well, I'm not sure it's a bite. I think it's that inflation is going to start to pick up. We've seen, obviously, in the US in particular, the best example is the labour market. You know, it's pretty solid, almost full employment, and that's that has been seeing wages growth for some time. But there's plenty of economies around the world, like in Europe and here in Australia, where we've had a pretty slack labour market. Now, that's starting to improve. So the time frame by which we see an improvement and that capacity start to tighten up and hence wages starting to improve is really been the main driver of inflation being so low. So it may well be a late 2018, but it's probably actually a 2019 story. And that's probably where we start getting some concerns around markets. Interest rates are going to rise, we might start seeing inflation starting to pick up, but it really, to us, is more a 2019 story.
You manage wealth, and hopefully you've managed clients' wealth very nicely this year.
Well, let's hope so.
Well, I mean, you know, it has been a good year in general, but when you look into next year, it feels as if it's not going to be a throw your dart at the dartboard and hit the bullseye.
Well, it's never been a throw the
dart. Well, that's okay. Yes, I'm not denigrating how complicated
global markets have been good,
navigating the markets, but it has been a very good year globally for markets. So, where are you telling people to put their money? How would you create wealth next year?
Well, certainly the first 6 months for us. I mean, the way we have clients at the moment positioned is still very much the global growth story around cyclicals. You know, from a domestic perspective, we think the Australian economy is going to start to improve even further. So there are some select areas, particularly infrastructure is a big one that we like in Australia. Macquarie is obviously very big in infrastructure, but more importantly, the total infrastructure spend in Australia is $237 billion. That's planned and financed. And on top of that, there's another $100 billion that's planned but yet to be financed. So the construction companies involved in infrastructure and the owners of infrastructure obviously is a big theme for us going forward domestically.